Okay, very good morning. Friday, 18th of May. Just to give you an overview, I'm going to talk about China, going to talk about oil, going to talk about Brexit. And then I'll hand you over to Sam, and he can go through the charts as per usual. So that's what's on the menu for this morning. But having a look at the charts here at the open across assets, fairly tame. In regards to, there has been some news out of China which we're going to have a look at, but it has been actually denied in the last 15 minutes or so. Well, let me talk about that news first, and I'll give you my opinions of and some details on what's exactly been happening. So this is it, straight into it. China offered Trump $200 billion cut in the US trade deficit, according to an official. So let me talk about the details first. So China offering that amount, $200 billion reduction in its annual trade surplus with the US by increasing imports of American products and other steps. China announcing today it would end its anti-dumping sorghum imports and anti-subsidy investigation into imports of that particular soft commodity, citing public interest. The move comes coupled with steps we've seen earlier in the week about that M&A deal, so the restarting of that large $40 billion plus Qualcomm application to acquire NXP. So more and more signals in general that a more conciliatory stance is being taken as these talks with China have been ongoing this week. So, you know, if you were looking at this, worry from 2 points. One, Trump's done it again. He's gone in hard and fast, and he's come out with a 200 billion concession. So, you know, as much as we criticize the guy, I mean, his strategy does seem to pay dividends in acquiring a significant concession. Couple of things though to be aware of. A couple of analysts just reading the various reports this morning, a little bit questioning of, okay, this is a commitment from China, but they do see it awfully difficult that, you know, can you realistically reallocate Chinese imports of energy, raw materials, so on and so forth, to change the bilateral trade deficit to the magnitude of which China are saying. Don't forget, this is all just promises. This isn't actually anything definitive signed off or anything near that at this point. However, this would be something that would be positive. You would say then this means that trade talks, this kind of what looked like earlier in the week was intensifying in a fashion that would create market negative sentiment. This headline would be positive. This means then that China are making concession, US get what they want, and so therefore crisis averted. However, as I said, in the last 20 minutes a headline has come out and basically said, this is direct from the Chinese Foreign Ministry, that it isn't true. The reports of $200 billion reduction in trade surplus was offered or was not offered on their side. Talks are still ongoing. So, yeah, there's no smoke without a fire. I'm sure these are the types of behind closed doors discussions that are going on, but China have denied it so far. The interesting thing is, even with that denial, the market really hasn't reacted at all because, as I say, the initial reports in circulation overnight you would have thought would have helped to bolster sentiment in a positive fashion. But how much of that is actually true, you would say, well, probably very little, because given the rebuttal has had pretty much zero consequence on market prices. So overall, I'd say it's pretty neutral for market sentiment this morning. There's nothing really major other than that from a breaking news perspective. As I say, a couple of things we'll have a look at with oil and Brexit, but neither of which I'd say are ultimately strategy deciding pieces of information or fundamental events. Most of them are just broader context of the bigger picture. So I'm going to quickly cover off those articles and I'll hand you over to Sam, because just given the light nature of the economic calendar today, it could well be one of those days where it's more technically driven than fundamental in that regard. So quick look at oil, and I saw quite a nice graphic this morning that I thought just summarizes really this journey we've had with Brent, obviously back to $80 a barrel. This goes back on the kind of bottom axis on the timeline to 2014. So putting in perspective with annotations of the major fundamental events that have taken place over the course of the last 4 years, essentially. So obviously the far left-hand side was when OPEC held their output steady despite this growing supply glut in order to try and squeeze the shale industry out of business. So that was that big dramatic fall that we had above $100 all the way down to what was eventually a $26 handle. But more recently then, this kind of ongoing commitment from OPEC and non-OPEC, chiefly then on the latter, Russia, to extend ongoing significant output cuts. OPEC output back in April falling to a one-year low at 32 million, and then these sanctions set to resume on Iran after US drops out of the JCPOA deal, being the last little kind of linchpin to push crude higher. That's kind of where we are at the moment. The new US sanctions that will hit Iran's energy industry, the fallout of Venezuela's economic collapse, all raising fears of significant tightening of global oil supplies. A few other things here to be aware of is obviously one thing we track week to week are the oil inventory numbers. And despite all these bullish factors, there is one thing that has been fairly consistent, and that's been the consistency of the rise in US oil production, which is at record levels now, in excess of 10.7 million. Interesting snippet that I saw this morning though in the FT, they said that swelling supplies from US shale fields at those levels at 10.7 million barrels a day have been expected to fill any gap in global supplies. But the industry, so this is looking more specific to the US, has faced pipeline constraints and infrastructure bottlenecks, limiting on how quickly exports can reach the market. So it's not as if this is a very smooth passage of just they pump this crude and in it goes to the market. Don't forget you have that Cushing in Oklahoma as that key kind of bottleneck area from the infrastructure network in the US. And so there is some supply constraint in how quickly that can hit the market, irrespective of the fact that they are producing such a phenomenal amount in North America. So again, it's not so ABC, as in their numbers that you read week to week instantly counteract this supply situation. And consequently then, with those other bullish factors helping keep these price points up, elevated, obviously Brent, AT, WTI this morning trading around its pivot on a 71 handle. One price target that I've seen this morning, Bank of America, I wasn't sure, couldn't see the specific time frame that they're looking at, but they are looking for a return to $100 in Brent. So obviously another 20 bucks than where we are at the moment. So there are a lot of bullish calls out there for crude going forward. Quick look at the other headline then, and that's of Brexit. And really this is just confirmation then of the reports that we've had over the last several days. As I said at the time, I didn't think it was particularly surprising that we would have this customs union discussion of an extension beyond or well beyond the transitional deal, which is due to end at 2020. So what's happened here is the whole of the UK will remain tied to the customs union with the EU after 2021 until an alternative to having a hard border in Ireland can be found, according to the PM, Theresa May. A few other points. The proposal then, as we know, they've got the June summit. That's when the next kind of significant meetings, top level from Britain and Europe takes place, and that's when this deal is going to be presented. Under her plan, the whole of the UK will be covered by the EU's common external tariff, removing the need for a customs border in Ireland or between Ireland and the UK mainland. This has come up, obviously, against criticism with the more kind of Brexiteer-oriented Conservative members like Jacob Rees-Mogg, for example, who's been saying that if you keep kicking the can down the road, well, then you lose momentum. In the end, you don't get what you want. And then you've got Europe on the other side, who also are not keen on this idea of continuing to extend and extend, because it will have ramifications then for the kind of the signal that it would message to other countries, particularly those of a populist nature, which we've seen is alive and kicking in the likes of Italy, and why are the UK getting special treatment, so on and so forth. So still something to monitor, I'd say, and but as an immediate net result for price of pound this morning, I mean, this isn't what's being factored in at all. This is just the ongoing kind of discussion, if you like. So that's pretty much it from a news perspective. There isn't a great deal going on the calendar either today. So as I say, it's probably going to be more important to really listen closely to what Sam has to say. Any identification of key trends, formulating from a technical perspective, and then the respective levels associated with that is probably going to be the more prudent way to approach today, at least for the time being, unless there's anything unscheduled that breaks on the news wires. Any currency traders in the live chat room, obviously if you're looking at the loonie, the CAD data, CPI from Canada alongside retail sales always is very volatile, so definitely worth keeping an eye on there, but I'd say just a degree of caution if you are looking to trade that event. It is extremely whippy, and the price action immediately ensues after the release of the numbers. Speaker-wise, Kaplan and Brainard both speaking later on this afternoon from a US perspective, but nothing out of the Bank of England or the ECB. Alright, well that's it from me. So enjoy your weekend, and I'll hand you over to Sam.
Hi guys, good morning. Let's have a quick look over, just before we go into the currency pairs, let's have a quick look at the DAX. Just come to my attention here, the pivot with yesterday evening's low, not too far away. So just bear those areas in mind, I would say, as an area of support going forward. We had, I guess, broken out this range that we've been in for the last week and a bit, so could expect a bit of support, if not on the pivot, the sort of weekly highs that we have had, and same for Euro stocks as well, which is just coming down to test that pivot now. So just keep an eye on those particular levels going forward. Looking at we'll start with the Euro. Just wait for that to load up. I was just looking earlier at the Euro, the Aussie dollar, and cable, sort of the three sort of main pairs, along with the dollar yen that we trade here, and you can start to see, you need to put this on a 60-minute, just price just getting a bit undecided around the levels that we're trading. You can see from the last couple of days, those highs getting lower, but also the lows getting higher. The highs getting lower, lows getting higher. Yeah, that's the one. So in terms of overall direction, while the last few days, like I've said each morning in the briefing, where the price action in the morning has been relatively choppy, and then the dollar strength sort of comes into the remainder of the day. Today I wouldn't be so sure on that in terms of definitely having a bias. You've got a couple of breaks of the trends, if you like, just recently, and you can see here in the Euro having broken above that this morning, the pivot, and well the sort of the resistance had broken to turn support on that trend now for the push higher. I'd expect some resistance on the highs of yesterday and the R1s, and then if you're looking for a continuation, especially on days where it's likely to be a bit more quiet or technical, if you like, I think if we get a breakthrough of this trend from yesterday and Wednesday's low, that could really be the opportunity to look to go short, and of course using those levels as the main target. But for now, I would say, don't necessarily have a complete bias that has been the same as the last few weeks. So you can see we're just getting squeezed in, perhaps a little technical breakthrough there, and we've got a bit of resistance coming up from yesterday. But overall, I think if you're looking for that continuation, really you're going to want to see that lower trend line break, and also what is the low of the day. Similar for pound as well. Of course, we've been on this downward trend for quite some time, and recently, I mean, just looking at that there, I think you can see that even above my camera, just choppy, you know, no real overall direction. Each time we come to test what is a key sort of low, we get a rejection, and the highs, albeit last few days, have been you know, getting lower in terms of the weekly sort of highs. But again, let me just get a trend line on here. It's similar to Euro, looking for that. If we're continuation, maybe you want to see a break of the support that we had last night, this trend as well, and then targeting the lows as the area to really to go short of the profit target. The high from yesterday evening has been the high of today, so we're stuck within that range. Waiting for a break of that might be the right thing to do. Pivot, I would look to sort of disregard now. Where we finish the week could be relatively important. If we can somehow push above yesterday's high, I think that would be quite a good signal that this could be the lowest will be for some sort of time. But let me just remove the pivots now, just to give an overall sort of picture of where we actually are trading for the pound here. And you can see really key level. Let me just move that above the camera, that we've had a couple of goes at trying to break. So if we were to close below here, the low of the year, lowest point we would close the year. So if we were to close below that, I think you know, it could really be curtains for a while, and then next thing you know, you're looking to get to those December lows. So important day for the pound. While I don't necessarily think it might happen that we close below there today, if we were to, it'd be quite a bearish sort of signal going forward for the weeks to come. Having a look over at the Aussie dollar, similar sort of picture. In, you know, a bit undecided last few days. The mornings have in particular been quite choppy before into the afternoon. You've seen a bit of dollar strength. Same sort of picture in that, getting a trend line going on from the lows up there, and also let me just get that on that point. I think it's a decent day to have these trend lines on there. I'm just getting a test of that pivot now. So I think here you can see, while this morning we've had sort of 1-2 tests of that level, if we were to break the trend line going forward, I think we could get a bit of a push down. The dollar again at this time has been very choppy, so I wouldn't want to be going in too aggressively. I'd prefer to see a break of it and retest, which sort of happened quite well yesterday. You had, let me see if I can get the exact trend on. So a decent sort of break of that, and we came back to test it, and we did then continue down for the remainder of the day, albeit very slowly. But for Aussie dollar, that would be the trade that I'd be looking at there. Just try to see a break of these levels to target yesterday's low, and then perhaps a bit beyond. I think we'll have good support all around this area from yesterday's lows, the highs from, would it be Wednesday morning as well. So it wouldn't be a trade to last forever, but that would be the sort of preferred one that I'd be looking at as well. Looking over at dollar yen, obviously this market has been on a decent trend for quite some time now. The level that I'd be focusing on, and I still would favour the upside here. I'd like to see, and it's more of an area than an exact level. You've got yesterday's sort of morning support point, you've got the pivot, you've got another area of support from yesterday around sort of 5 o'clock. That would be the point where I'd like to look to continue this going forward. Of course, the sort of high that we had Tuesday evening could be another place, and you've got quite a good area as a stop. But I think if we were to come down to the pivot area, albeit just above, that would be a good area to look to go long and then target the previous sort of highs of the day. But for the pound, euro and Aussie dollar, just be a bit careful, as we're just starting to get squeezed in, especially in the case of the euro. It might be that you're better off waiting for either a continuation break of that trend to the downside, or if it's the upside, maybe looking for R1 yesterday's highs to sort of break. So definitely not one to be too aggressive, I would say, today. Having a look over at gold, obviously that's again another market that's been quite one-directional in terms of to the downside. Let me just get this trend line on as well. You can see last sort of few days really well respected, and again this morning the highs of each day. Is that going to be the high of the day? Could well be. And again, if you're not in the trade for gold from that level, the opportunity I think would be if we were to get a break, you guessed it, of that trend line where we're getting squeezed in. Yesterday's low, today's low. Can we get a push on through? Decent profit areas from yesterday's sort of areas of support as well. It might well be that if we are to get there, you're going to get Aussie dollar breaking through that trend line as well. Dollar CAD just pushing on as well. So the dollar just perhaps starting to find a bit of strength here. Dollar yen just pushing up over the last 15 minutes. So be having a look at that for gold. Obviously the volume are unlikely to be there in the morning, so again a case of not really going too aggressive, and you'd probably want to take a bit of profit on what currently is the low of the day, and then try let it run down to S1 would be my preferred trade. Obviously if we push on with real aggression to the upside and break this trend, then you can start changing your view. Stevens just asked a question, should we take profit out of some of the dollar this afternoon? I think yes, I would say so. I wouldn't really want to look to hold it too long unless we were to get an aggressive push down, as we're just starting to see price really go a bit more sideways over the last few days. Would favour the dollar strength still, but I'd rather let the market tell me when that's going to come in than sort of have half a gamble on it continuing. Equities, bit messy again yesterday. It's been the story of the week really. If we mark up the sort of range that we're in, maybe yesterday's high, yesterday's low, again you've got another sort of trend to be focusing on there. Really well respected late last night, about 6:30, so you can see Tuesday's low, Wednesday's low, Thursday's low, really nice. Can we get a bit of support around there with what was the low of yesterday evening? Be a level I'd be focusing on later on, whether it be to go long or look for a continuation maybe to the downside after the cash open. I think it's worth having that on for all equity markets, just out the corner, and same to the upside. You see we're starting to get squeezed in from both directions. Where we finish the week, can we finish above, can we finish below, I think will be quite important. Same for the FTSE, obviously near that all-time high. Can we get that level today, or is it actually going to be a double top and we actually start to look coming down a bit further? Same with Brent, can we close above 80? Worth having a look at. Oil, US crude here going sideways, not really much movement going on this morning. Really that's probably the quietest start to a session this week, so just bear that in mind as well. See if we can get anything out of this. Okay, if we get a break of that, you might get a bit of a push down, but I think today it's key to take a portion of the trade early, make it risk-free as soon as you can. I would favour dollar strength, but more, let the market tell you when that's happening rather than just saying, oh, it's a pivot level, I'm going to go short kind of thing. So the continuations, maybe breakthrough, risk-free as soon as possible would be my sort of go-to here as well. Any other questions? Please do get them in the chat. Let's have a quick look over the euro before we wrap. So you can see that's just starting to come down a bit. The pound, okay, so the dollar just strengthening a tiny bit here, and I'll be focusing on that to possibly continue. And if we can get a break of those trends, that would be the ideal sort of play, I think, going forward. If I don't speak to you guys in the chat, have a great weekend. Enjoy the royal wedding, and I'll catch up with you guys